That's like, I'm so ready for you to be like a radio show host right now.
And we're live. Julian talking over our intro. God damn it, you bastard. Hey, it's another weekly Crypto Bootcamp Hangout special Gasparilla edition for the pirate parties here going on today in Tampa Bay. It's 1/27/2018. We've got Brian Cribbs lurking Bluehead style. We've got actually, you know what? I didn't even turn on my my cool little tools, so let me fire that up here real quick. We've got Jeffrey Diaz back with us in his studio. Jason Weiser with all of his professional studio gear, which Julian was just slobbering over. And then, of course, Julian Picasso himself, the man in the house from the southernmost point of Florida, I believe. You're down in Miami right now, right?
Yeah, edge of the Bermuda Triangle. There's no escaping the vortex, man. Once you're this close to the vortex, that's it. You lock in. There's no out. How are you guys doing today?
I'm I'm pretty all right. Having my first cocktail for the evening. By the way, if you install the Hangout toolbox, then you can use these really cool what they call lower third overlays. I've been making up a new title for myself every week.
Sweet. I approve. I tried it last week, but for some reason I couldn't do it on my phone and never got back around to it, but I'll try it again on my laptop.
I'm not sure if it does work on the phone or not. I think it's purely a browser Hangout.
Yeah, it tried because I'm using Chrome on my phone and all that, but it just didn't finish.
Word. Well, a lot of people I know who would normally be riffing on a lot of the heavier topics are currently out right now throwing beads and drinking booze and stumbling down Bayshore Boulevard. So instead, I think we're going to focus mostly on newbie questions this week. And Jason said he's lined up a stack for us. So why don't you kick it off?
Well, I don't know about a stack, but I'd start off by saying that I feel honored to be a member of this group, to be the kind of the token newbie. And you guys have all been wonderful in helping me along, so much so that a month ago I didn't know anything about crypto. And that was when Chris invited me to the group. And now I have gotten in, got everything set up, figured out the whole Coinbase, Binance, GDAX, figured out that whole system, which there's a really great thread. Anybody that's watching this, make sure you go to the group and read that, because there's some great tips in there on how to kind of get started. I mean, that's kind of been done ad nauseum, right? Everybody out there can teach you how to get started, but you guys really showed a couple really quick and easy tips that I think were important and helpful for me to get going. And of course, the very first day that I get in, I find TNT, right? And I was mentioning a little bit about this, and TNT is just taking off, right? I'm all excited. Wow. And I'm, listening to Brian Cribbs' advice, about how to convert your fiat, and don't worry about fiat. Just convert to whatever coin you're trying to increase your position. Mine is Ethereum, and every hour or so, here I am increasing 3 to 5% all the way up from I don't know. I think I started around 21 up to 41, and I'm just, yeah, this is incredible. I'm so excited about it. Of course, it starts dropping down. We're at about 34, and I figured, you know what? I'm piling in. I'm all in on this. This is great. So I take my original investment plus the profits. I put them in, and of course, as I now see is the crypto world, we're back down at 24, 26, and I'm enjoying the reality of crypto. So my lesson from that whole thing was, really understanding, what is it that I want to get out of all this? And I read a really great post that you put up, Chris, when you're talking about, holding on to Tron until April. And I'm thinking, hold it, this thing's 7 cents. Why are you going to hold on? What's the big deal? And we're going to get to that in a minute. That's one of my noob questions for you is strategy. But the first one that I want to hear everybody here, or whoever wants to answer this. The first question I have then is about scarcity. Lots of talk about the reason why Bitcoin is doing so good is because we know that there's only 21 million out there. There'll never be any more minted, and that's why scarcity is playing into its value. Yet, one of arguably the second most popular, Ethereum, does not have a predetermined value. Yet it still is, highly traded, highly respected, and is often used as one of the two, as the key to the pair. Who wants to talk to that question?
Well, I mean, I think we could start out with understanding that scarcity is only one factor in a model for value, right? Functional utility is another. So one of the things that people are talking about, you know, Bitcoin being a bubble all the time. I mean, Jesus Christ, if I had a Bitcoin for every time I've heard the word tulips, I'd be a retired crypto millionaire. But you know, the thing is, with Bitcoin being thought of as the first cryptocurrency and really nowadays being treated as a store of value, scarcity comes into play because you're never going to have the amount of Bitcoins that outstrips supply. In fact, you know, at some point in time here in the short-term future, all the possible Bitcoins will have been mined. So that's it. There's no more. You know, it's functionally impossible at that point to add to the Bitcoin blockchain. It's reached its built-in limitation, right? So the idea that Bitcoin could be diluted down to, you know, way back to the original levels, $5, $10, all the rest of that, given that it's already proven itself as a store of value, the scarcity that's built into it helps maintain that value. Now, obviously not, you know, at a 1 to 3% growth per year kind of stable value. There's certainly still quite a bit of volatility in the market. But it's a lot more stable than you would see on coins that don't have that, like Ethereum, for instance. I mean, a lot of the altcoins right now that are getting minted are 100 million, 200 million. I've seen a few that are in the billions, you know.
100 billion, isn't it?
Yeah, I mean, it's, you know, one of the projects we're working on. The original mint is 1.2 billion. And the reason is because those coins are not intended to be currency, they're functional coins. We need a lot of them in the network because they're transactional in a different way, right? So Ethereum has a lot higher amount, obviously. But the thing about Ethereum that makes it valuable is the fact that it's functional. It established the ERC20 standard for smart contracts. It is an open source network that you can publish your own contracts to. And that's how a lot of these other altcoins are being built, is on the back of Ethereum. And the fact that Ethereum is the developer's network of choice for altcoin, you know, in the mass majority, is what continues to drive its value up, because people are going to continue to use the Ethereum network to build new applications on top of it.
So when you're saying, you said something else that's really interesting. Did you want to pipe in on that, Julian, before I go?
No, I'm listening. I'm enjoying.
Okay. So the other that leads me to my next question. You just made a great point that I think I know I haven't found the answer to, and I think many newbies and people don't understand. When I buy a coin, what am I buying? I mean, I understand the whole trading concept, you know, and I can look at the charts and I can look at the graphs and I can get in at this and I can get out at that. I can day trade and make some money and I can hodl and all of that. I get that. And I understand blockchain and I understand utility, conceptually anyway. I'm certainly not a developer. But what I still don't quite get, you just said Tron has to have enough coins to be able to make it. So what am I buying when I buy a coin?
Well, I mean, you're buying a tokenized transaction, essentially. You know, you're buying an entry into a record in that ledger that says you hold these positions here. You know,
what does that do for me, and why is that valuable? Why is that useful?
Honestly, the vast amount of value that's being created by the exchanges right now is simply perceived value. You know, a lot of altcoin trading is highly speculative. People are speculating that the value of that token is going to increase with usage. You know, and so it's like gold, right? Nobody is actually using gold for currency, and yet gold has value as a currency. But the reason that gold still has value is twofold. A, it's functional. It's used in microcircuitry. It's used in a variety of business and industrial applications. It's always going to be wanted and desired for those purposes. And of course, it has value as decorative, as jewelry and all the rest of that. So because you know that there's an ongoing need for gold, a functional need for gold, gold is going to continue to be bought and sold, right? And so people speculate on the value of gold and they invest in gold in the hopes that as there are market turns and shifts, as there are shortfalls in supply, all the rest of those things, that the price is going to be variable and those things will affect the value and you can, potentially have a long-term gain on it. The other part of the equation is that at the end of the day, any savings account that beats inflation is a winnable investment, right? And so if you think that the long-term utilitarian value of this thing that you're investing in is going to do better than 1.3 to 1.6% a year on average, that's investable. Maybe not highly profitable, but it's investable. You know, it's a better place to keep your value or your store of wealth than USD, because we know that USD is going to lose 1.3 to 1.6% value a year on average, you know?
So when I try to imagine it in terms of stock, right? Am I buying a percentage of the shares of, say, Ethereum? I mean, am I investing?
Somewhat, yeah, but it's functional in ways that stock never was. And those functions are really intriguing. There's also, you know, like we're missing the basic wording in this conversation, which is what it's all about, which is supply and demand. You know, like the reason there's a fixed supply is because then you can measure of Bitcoin, for instance, where they're only going to mine so many, is because then you can measure the relative value based on the demand as it changes over time, because you have this fixed supply where there will never be more than this amount. The same goes for land. It's the most valuable thing because it's just physically not possible for anybody to make more land. So considering assuming the demand is going to continue to grow, you'll have a growing demand and a limited supply, and that will increase the value. But you're not really buying stock in the sense, even though you are, and it plays like stock, because the token, and this is, yeah, like we're like, let's say gold and diamonds, right? He was just talking about the different things you can use gold for. You can make electronics components, you can make pretty jewelry, you can use it as a trade value, and these are demands on the use of gold. Diamonds, the demand isn't the same. You can't make the same stuff out of diamonds that you make out of gold. So the reason that I'm using this metaphor is because Ethereum, their real like winning, their killer app or whatever, their winning move was smart contracts on the blockchain. And the applications of that basic core technology are so vast that as much as we want to be able to give you one answer and be like, what is a token? What did I buy? That token can represent many different things depending on how they're iterating, depending on what they're using that ledger to store and track. So if they're using it to track database usage for cloud computing, then based on the demand for, blockchain-based cloud computing, you're going to see a rise in the value. You know what I'm saying? And so then you will have bought a little bit, a stake, so to speak, in this particular company's cloud computing platform where they're going to build it all on the blockchain. And so Ethereum, because it's a platform, lots of people are iterating lots of different things on the ERC20 platform. It's not like one value when you buy Ethereum. You know what I'm saying?
The other part of the equation is these transactions, every time they occur in the blockchain, the vast majority of these systems have a user incentivization fee, basically a transaction fee that gets paid to the nodes that are processing these transactions, right? The concept of gas in Ethereum, and each of the networks has their own version of that. I think that Neos is called like ETC or something like that. And so it's a way to incentivize the users in that network to participate in this distributed model, right? If I'm a node on the network, I'm getting a little piece of every transaction that comes through my node. So there's a trading or a relative value to those tokens because they're required to run this application. You know what I mean?
So in understanding that, and I think that's where the hardest thing is for somebody to understand. Again, the currency side of things, I get it. That it's a utility, and that continues to really intrigue me the most. On that, recently in the group, one of the members said, I lost Bitcoin. Oh no. And then today or yesterday he was all excited. Hey, I got my Bitcoin back, to which somebody replied.
He lost Litecoin.
Litecoin.
He sent it to a
Litecoin
wallet.
Okay. So what my question on that is, let's think about, help me understand the anatomy of that. All right. When he says, okay, I love the blockchain. All right, let's really kind of go into the anatomy of that. What is that? How did he recover those? What did the blockchain do for him that blockchain's going to do for the world, in the next 5, 10, 25 years? I think this is a really great little sampling of what we're really kind of the direction we're headed with the purpose for why blockchain has value, right?
So when you think of, when someone says blockchain, I think the easiest thing that for most people who are just like getting into the space to understand is, think of blockchain like someone saying database, right? You can have a whole shit ton of different databases, right? And those databases may use different technologies, right? But they're all databases. They're all stores of data. Blockchains are the same way. They're decentralized node-based data models, and they all have their own different structure, and a lot of them all use maybe the ERC20 standard, but there's different types of structures and different types of all sorts of things. I mean, a hash graph application uses a blockchain model, but it's a highly different blockchain model than like Bitcoin or Ethereum, for instance, you know? There are, you know, a handful of blockchain types that are in the wild right now. And if you're trying to send a transaction from one of those blockchain types to another blockchain type, you know, that application may accept the data request, but it's not the same format or the same language, and it doesn't know what to do with it. Now, the reason why that's cool with him on the blockchain side and how he's able to recover those Litecoin back is because of the fact that a technician who works on the blockchain application that he sent that to can go back and look for a transaction that comes from the originating address that he specifies, you know, and find this transaction of bad data that doesn't fit into their network. Because it's the wrong language and doesn't fit into their network, it made no change to their network. It's just bad data. The network ignores it. You know what I mean? So they can go back and look and see, oh, yes, this thing did happen here. And then they can essentially reverse that transaction back and send it back to the originating wallet. The originating wallet does speak that language. And so it goes, hey, oh, yeah, here are those tokens that I used to have, you know?
And I know there's a lot of people probably, I mean, there's two camps really that kind of are involved in crypto. And, you know, there's obviously the excitement of like I said, the currency and the utility. And I think I'm kind of taking it a little bit into the utility conversation, but it's important. And for the currency folks that are watching who say, you know, bring it back to day trading. I want to hear about the numbers. I want to hear. I think it's important because these questions are what are going to help me determine which coin to invest in. Right?
Yeah,
I mean, what?
I think that conversations that are all about the day trading really kind of miss the point because the underlying technology is more important. Julian, what were you about to say?
There's a third camp, man. And it kind of, that camp overlaps in a Venn diagram with the other two, which is the people that are in it for the ideology. You know, some people try and downplay the ideology side of it, and the people that came into it during, you know, post-Occupy, talking about taking down central banking and talking about decentralization is a better way of us sharing resources as individuals and not using these, you know, quote unquote trusted third parties, but also large centralized pieces of infrastructure like governments and central banks. And that there were just other better ways for us to share resources, period. So that's the ideologically driven side of it. And everything else, the market side with the traders and the tech side with all the utility, those kind of originally grew out of visioning that. And they don't require it. They don't have to carry the ideology, meaning like you don't have to tokenize. You don't have to decentralize. You can use the blockchain in other ways. But the ideology camp is real, and you know it's a big factor. It's out there, like as part of the culture.
And that's why some people hate Ripple, because it flies in the face of that.
Exactly.
Very much so. And there's a lot of people who've talked about that, and not just Ripple, any of the what we call regulator-friendly tokens, you know, tokens that are explicitly designed to be trackable and usable by banks because it moves away from that decentralization. You know, I think there's another circle of folks that kind of cross over between the trading side and the nerd side, and that's the folks. I mean, I'm a little bit on the trading side, obviously, but mostly I'm on the trading side so that I understand the consumer side of the technology that I'm interested in working on, you know?
Right.
I want to know what's happening in the exchanges and the markets. And because of my experience with this group, for instance, like us watching pump and dumps and things along that line, when I go look at a blockchain development project now, especially a blockchain development project where their intention is to get a token for that project listed on an exchange to help fund the project. I can start asking those questions now. Like if they're specifically tying a token back to some sort of USD value product or something along that line, I can take that trading experience and say, okay, so what's going to happen to your product value if somebody's running a pump and dump on your token in an exchange? Is that going to affect your business and your project? You know, so it's important to understand those things. And that's the other part of the equation. I think, you know, when you said, you know, am I investing in this company? I think there is a partial yes answer there, because you believe in the project, right? You look at the technology that's being developed and you say, yes, I think that this is viable. I think that this is going to solve a real problem, and I think that the solution that's being proposed sounds like a good solution to the problem, and I believe in the team, and therefore I'm willing to part with some USD to back this project. You know, so when you look at like ICOs and that sort of thing. Yeah, in some ways you are investing, although not in any sense of the traditional form of investment. You're just hoping that their project is successful enough that it generates secondary trading and speculation in order to get some return back on the money that you put in.
Well, I've taken at least half of this. I still have about 100 more questions to ask, but I certainly don't want to hog the whole time. I'll continue. But with Jeff, if you
shoot, man, keep us moving. Yeah.
By all means. Hey, you can see that we would have enough content to fill it out today, despite the fact that some of our normal or regulars are going to be out partying their ass off at Gasparilla.
Jeffrey, did you have something you want to jump in here on?
Not really. I mean, everything you guys are saying just kind of jives with how I see things. I look at Bitcoin and Litecoin and Ethereum as like the platinum, the gold, and Tron, for example, that's like investing in a company, like shares for, like if I was playing with penny stocks, you know, I look at it that way. They have a great team and products, and then same thing with Ripple. You know, exactly what you guys were saying. So I'm interested in learning more about how it all works together, and then you know, seeing how, if there's a way for like some of us to like gain, like maybe be a part of it somehow with the transactions, since there's so many transactions, and the crypto
node
relays.
Stuff is super interesting, and Jeffrey is the infrastructure guy, so I'm really curious to see how much progress he has setting up nodes and kind of calculate what those earnings are. And we see Harry Horton joined us as well. This is our special noob question edition of the weekly Crypto Bootcamp Hangout. So if you have any noob questions that you'd like to throw into the mix, you are welcome to do so. I'll take that no for now.
Jump in, interrupt me. There was a really great pre-show discussion that was going on that curiously was on my list of questions as you were asking, do you want to hear more about it? And I had, you know, Julian was talking about, you know, contract law, legal documents. There's a lot of talk about this. Chris, you're talking about how blockchain can be used for food supply. And these are the kinds of things that I think, unless you're developmentally minded, it's really hard to grasp. Now, you touched a little bit on when I asked the question, what am I buying when I'm buying a coin? And you said you're buying, you know, connect those two questions together. What am I buying when I'm buying a coin? Help remind us what you said there, and then bring that into, now how does that apply to food supply and say contract law?
Well, I mean, there's not really so much a direct connection there. Brian, okay. What does I'll relay mean?
Harry said his house is noisy. So I said he can just chat his questions and I'd read them aloud.
Okay, perfect. Well done. We'll have assist questions as needed. So when we talk about using blockchain applications for things like food supply logistics or stuff along that line, right? When you write a contract, right, you're essentially writing a data schema, right? And you're saying, I have these fields that are present in each transaction. Every time a new entry to the ledger is made, it has these fields, right? And some of those contracts can be quite complicated. They can have fields and columns and multiple row structures and nested columns. And they can do dynamic things like create new contracts on the fly, or, you know, various other types of things. But each time a transaction is posted against that contract, that's making a new entry in the ledger, you know, basically the same way that you'd make new entries or new rows in a database, right? So when you do that each time, there's a signed key that's attached to each one of those transactions, and that transaction history, using the same algorithmic math that it was originally signed from, should follow a progressive state all the way back to the beginning of that blockchain, right? There should be nothing in there that is not a verified, like, transaction that includes all the appropriate data elements and all the rest of that. So when you talk about doing things like supply chain analysis and stuff, if you had, you know, essentially a contract for each item of food in a supply chain, right? And you could say, from the beginning of this, here is where it was signed off by the farmer when he harvested it. Here's when he delivered it to the vendor, who drove it to the port, who delivered it to a captain on the ship, who dropped it off to a harbor master in this other country, and every single transaction along the way would be verified by that same key, right? So that's like a supply chain validation that's really difficult to occur in the systems that we have now. There's no really good centralized, which is ironically the opposite of decentralized, but there's no really good way to do that supply chain analysis right now from end to end, because you've got all these things like transshipping, where countries of origin will ship their food to other countries and mark that as their new point of origin to get past like international trade laws about where you can buy products from and things along that line, you know? So if you were forcing vendors to participate in the supply chain system, you'd be able to have a single verified chain of transactions all the way back to the origin. You follow?
Absolutely, and that's interesting how you say that, because one of the things in my very limited knowledge, one of the things that I was thinking of is I'm trying to think, okay, how would I use blockchain, right? So it kind of helps me understand a thought that I've been having is, as a marketing director for companies, several of my customers, which are, you know, corporations who have lead gen cycles of 2, 3, 5 years, and it's often very difficult to be able to prove. Right? You say, okay, we invested in social media, email marketing, and SEO. Right? We spent X amount of dollars on that. We can follow Google Analytics all the way through onto the website. We can see where they transacted. We can see them fill out a goal conversion. We can see that their name went onto a CRM. But once they get onto the CRM and into the sales cycle, and one of their sales reps have to pick up a phone, I've just been thinking, I wonder if there's some kind of an application where blockchain, because of all that, where you could actually start to track and companies could see this sort of validation from my initial marketing investment all the way through to my final lead. I don't know. Maybe I'm way offline here or not, but
I don't think so. I mean, honestly, given how much wild ass speculation we see about blockchain applications, yours actually sounds like something that's pretty reasonable, you know? One of the things that we see that, just like, you know, the internet, you know, if you remember the movies around the 2000s about the kinds of things that hackers could do across your computer, right? Like, they could blow up your house. They could like kill you, you know, they're going to hack you to death, you know. There was this sort of disconnect between the reality of the technology and what was actually possible with the technology, you know. But realistically, you're much more on track. If you're thinking about blockchain as a data model, right, then anything that has a ledger style data model where the ability to track states over time, right, kind of like some of the problems that T-SQL solves, where it has, you know, time-based states of data and you can do time-based queries across of, you know, to compare multiple states. That's functionally or architecturally similar to the way that blockchain works. So, you know, something where you were tracking like historical movement of a lead over time, you know, and even to the point of like building a CRM on top of it, that all seems like a perfectly reasonable application. Would you generate a token on the backside of it? Probably not. You know, that'd probably be something more like a Hashgraph style or tokenless application where it's not really needed. You're just using the blockchain data model, you know, but I think that's a reasonable use of the technology.
And it wouldn't be hard to implement. Most CRM solutions have APIs where you can build your own plugins. It would be relatively easy to build a plugin for something like Salesforce, to have it do PubSub to the blockchain, and you could probably also write a Google Analytics plugin to do the same thing, to inject the data on that end. So you could even have it feed to some other system, like ordering system, or if you had some sort of automated ad placing setup, you could even do that. If you realize that revenue or ad space A, ad space B, you could have a tool to analyze your blockchain, see what your monetization is towards those two things, and adjust it as needed. That way you're not just pissing money away thinking this is actually working when you get the conversion, but then when they actually become a customer, it becomes less valuable to you. So you could analyze it across much broader space than you could, using 3 different tools and assuming that it's tracking through how you think it is.
And for anyone who's in the development space right now, there's a product called Infura. There's a web3.js that you can just include in a project that gives you like JavaScript-based API access to blockchain applications, or in this case, Ethereum. But there are similar tool sets for most things out there. So when it comes to like interacting with an existing web interface, if there's extensibility that allows the use of JavaScript, you pretty much already have those options there if you do just a little bit of digging.
You said web3.js and what else?
Well, Infura is I guess the
Infura?
Yeah, Infura. Web3.js is the file that we use to implement JavaScript-based use of it.
Okay.
I can scroll.
And I want to go back to something that Julian was talking about. I know in one of our earlier conversations, and Chris, you just kind of said it, the centralization / decentralization, regulation, non-regulation. When is regulation good? When is regulation not good? And particularly, Julian, you talk a couple times, you've mentioned, like with contract law.
I think Julian and I should both answer this question.
Yeah.
Go first, Julian.
This is definitely one of those open for many opinions kind of topics.
Right. So specifically, I want to ask you, Julian, though. All right, here's the scenario, right? Law, right? Contract law. How do we know? Okay, my will is on blockchain. It can be proven and verified. But how then does that become regulated legally in a court of law now, where it can be, my family or my state now all of a sudden gets to transact upon that? There has to be some regulation.
Question I wanted to hear answered. I wanted to hear how much regulation is good regulation versus bad regulation.
Well, that's what I'm saying. That's what good regulation would need to happen, right? We'd need to have regulation.
You're using the word regulation in the wrong place here. If you put your will on the blockchain, the word you're looking for is execution. What's going to execute your will? And that's why decentralized autonomous organizations became a thing a couple of years ago, or just the idea that you don't need anybody to sign off. If it's built into the smart contract, it auto executes. As soon as the blockchain receives whatever proof it needs that you're dead, it's going to auto pay out into whatever accounts, whatever your will says.
Really?
Nobody needs to sign off. There's no probate court. We're in a theoretical scenario here. I don't know about anybody building last will and testaments on the blockchain, but the point is that doesn't have to be regulated. Although you would want somebody checking, because otherwise people could hack, fake your death, and then it auto pays out your will, and that wouldn't be good. But the whole idea of it being autonomous, I think that's really why we've got so much traction right now in the blockchain space, is that it's proven itself for 10 years. It is a stable platform. It just works. It doesn't need a lot of people in there running it as a central authority. It's all the different data coming in and out from all sides doesn't crash it or shut it down. It manages the data and continues to work. And it's been 10 years of a stable platform, of many iterations now of a stable platform. So yeah, the whole idea of regulation being the solution. I mean, you want a fair amount of regulation in there. There's market manipulation is what it is. And at some point you want somebody curbing some aspects of a marketplace to prevent massive theft or certain things. But But I'm not a big fan of overregulation because it leads you right back to central authorities again, where now you can't do anything without a central authority approving it. And then why do we build a decentralized network? Like the whole point is that you shouldn't need one. We should be able to go directly between us, directly between you and your family, without you needing a person in the middle. You know what I'm saying?
So, I mean, I like that philosophy, and I understand why that helps drive the community. But I'm you know, I started off in my late teens as an anarchist, wound my way through libertarianism, and ended up somewhere as a pragmatist with a few even conservative values, maybe. And so what I see is this: the social systems that administer these things are not going to go away for the foreseeable future, which means that for blockchain applications to really sort of gain and rise, they have to be able to navigate, or at least in some meaningful way interface with, the social systems that we currently have that help execute and operate these things. And so probate court isn't going to go away anytime soon. And just because somebody wrote the, you know, MYW, my will token blockchain application and allowed you to put your state rules on there, doesn't mean a probate court's going to be like, yeah, fuck that nerd shit. There's no will. And we're giving it all to Uncle Bob. Right. And since they have the power of men with guns behind them, well, you know, that cool technology platform means fuck all in the moment, you know. But the reality is, if instead of having a self-executing will system, you had a blockchain-based will and estate system that was just an immutable record of your desires for what happened to your possessions after death, and there didn't need to be some contract signed by attorneys stored in a safe somewhere. Your last will and testament was spelled out in a record on a blockchain that could be unlocked with your private key upon your death, right? And then they read it out from there, and that's accepted as a court certified document because it's blockchain, you know, authority based. It's a trusted record, you know. So, like, I think that's where that midpoint comes in before some of these other systems start to, you know, be reduced in importance, which is necessary for them to eventually go away.
Right. And I mean, he's absolutely right that we need to be able to plug into existing systems. The reason I lean so hard away from them is that things that we haven't conceived of because they haven't been a part of our world become possible when we start leaning away and when new technologies make them possible. So if we keep trying to reverse engineer everything we build to be backwards compatible to the old paradigm, we're not going to get very far. So we need to keep checking in with, well, what's possible now? Do we really need that? Or is that just redundancy in design? I mean, I spent 10 years as a camera operator in Los Angeles. Do you know how many digital video cameras still had ISO and other like celluloid based technology? You know, all the numbers and everything are based on technology that doesn't exist in the camera anymore. And it's because they were trying to make it backwards compatible to the old cameras because all the film professionals were still using them. And I was like, but ISO isn't even a thing with this. There's no celluloid. This is not, why is there an ISO on this? And it's, you know, and that's, we get limit in our thinking. What could a camera be if we redesigned it from the ground up? What if it was just a sphere that captures in all directions? No ISO and whatever, 4K in every direction. You know what I'm saying? Like, you have to try to keep opening your mind up when you're developing out new technologies and not just trying to fit everything to the old paradigm. But otherwise, other than that caveat, like Chris is absolutely right that you do need to plug into the world today, or it's just your pie in the sky and it's ahead of its time, so to speak. And it's not gonna, it won't get any adoption because no one will get it, so no one will use it.
And in speaking of that, you know, the corporate world or private enterprise, it's easier, although still not easy, but it's easier to make those sort of radical changes with disruptive technologies, you know. I hate the whole use of the buzzword, but, you know, like that's what it is. You put out something that does something so much better than previous things which did that thing, right? Then everybody's like, well, damn, dude, I'm using that, you know?
You know what less buzzy buzzword I like instead of disrupt? It's just too many syllables, so it can't buzz enough. It's disintermediation instead of disruption.
God, I have heard that one a lot lately.
I fucking love that word because that's exactly what we're going for, but it's too many syllables. It'll never buzz. It's like,
you know, it's funny because it's, again, we were talking about the paradox of decentralization being the sort of like driving philosophy behind blockchain, and yet so many of the actual applications are centralizing systems by disintermediating, right? They're removing middlemen to the equation that aren't necessary and replacing them with peer-to-peer transactions. And in a lot of ways, that is centralizing, you know?
Yeah.
There's a lot of decentralization that occurs in that intermediary structure. And that's kind of evidence that decentralization isn't always a good thing. Some of the problems that we're solving with blockchain applications are related to de-intermediation. Because of the fact that not everyone has access to the same data at the same time, they can't make as good a decision, right? And that's a result of decentralization. All that we're effectively doing in blockchain is decentralizing the model, but the data itself is becoming centralized, and that's the contradiction.
Yeah, so I've also heard, and we've only got 10 minutes left, and I got one more question I definitely want to ask, which the truest tradition of this community is a noob question. I think some of my noob questions today were a little relative, but I certainly enjoyed this conversation. With regulation, I've heard the argument too that people are saying, you know what, hey, let regulation happen because that's a validation. It says, hey, this is real. And as soon as the banks and the government, they start to want to, get involved in it's their way of saying, you know what, this is something that's real. It's staying. It's not going anywhere. It's a validation. And so with that regard, it was welcome.
Okay, I'll answer this one first this time, and then Julian, I'll let you wrap up with your thought and close the show with it.
No, I got one more question to close the show. Now you go quickly.
Hit me. What's the question?
Okay, so Mt. Gox and CoinDesk, long time ago, and just this last week, right, were both examples of how unregulated architecture in applications that manage large quantities of cryptocurrency led to huge losses with no recovery mode for the people who lost. That's a problem. That's not enough regulation. When you build a banking application, you are held to federal standards about security and other methods of how you're protecting your customers' money. And that is critically necessary regulation in this space for people to actively believe in it and trust it enough to put their money into it.
To counterbalance that, if the government decides to step in right now, Bank of America has something like 52 different patents, in various stages of application or approval for blockchain-based or related tech. If the bank steps in and says, okay, we're going to regulate this space now, and they only approve, technologies that the patents are owned by central banks or government entities, you've literally regulated the revolution out of its own relevance. Like, then the tech still works, but the ideology part of it is gone. And there's a reason for the ideological principles being the way they are. Like, we haven't actually gotten the tech to the level of decentralization we want. If I can host a node on my cell phone, and so can you, and so can everyone else, and we don't need like massive servers, then it doesn't matter whether the government approves of it or not. So one of the whole points of decentralizing and avoiding regulation was that if the government decides they don't like it, but we decide we do, they can't actually shut it down the way they can't actually shut down peer-to-peer and torrents and all that. They can get in there and they can write laws and they can interfere, but it routes around that. It's one of the great things about the web being the way it is. You can route around censorship. And if the people want to use a tool that the government doesn't want them to use, you can't really stop them.
I think it's a good thing that you brought up torrents, because I think that actually kind of is a counterbalance to your counterbalance. We look at ISPs who are doing deep packet inspections, and they're looking for torrent traffic, and they're blocking or degrading that signal. And with the loss of net neutrality and the loss of the ability of all network traffic to be treated equally, that fully opens up the ability of the average user, roughly 80 to 90% of the population, who's going to be connecting through one of 4 major ISPs, who can all quickly collaborate on building deep packet inspection systems that are designed to shut down peer-to-peer crypto transactions.
Yep.
So again, pragmatism says it's a great ideal, but we're just miles and miles away with it. And so we have to be smart in building with how we interact with these systems. And we've got to self-police enough that they don't have a good excuse to regulate. So when things like CoinDesk happen, it's bad for all of us.
Agreed.
7 minutes left. True newbie question. tactics versus strategies, right? Everybody, all newbies love words like ninja, right? So I want to hear from every, whoever wants to throw it out there. Tactic, for example, is use ACH debit, or, instead of using ACH, use your debit card with your bank, and you can get that money quickly in and out of Coinbase, and you can be trading today. Hey, when I found that out, I was all excited, right? ACH took me a long time. I had to wait 10 days, and I was like, I can't trade. Somebody says, use your debit card. The same account, money's coming from the same bank, but it was instant. I was like, oh man, what a great newbie. What an exciting newbie tactic I was given. Strategy. Talking with Brian, he shared a really cool spreadsheet with me from Crypto Junkies talking about pluses and minuses, percentages for the day trading. And that was some really cool, fun strategy stuff. So I want to hear from each of you guys. Give us one of your favorite ninja tactics first. And then if we have time left, I'd love to hear your 6 month to 1 year strategy. So give me a ninja tactic, Chris. Or Julian, you're jumping there. No, you're
No. I'm mute on this round.
Okay.
You're not a trader.
I mean, I'm a swing trader, but I don't know what ninja tactics I have. Some of what you talked about is stuff that I think of as you figure it out pretty quickly. Like if you're trying to make moves, I think a lot of us were trying to make fast moves in December and in January, but I'm back to making slow moves, man. So, I mean, fast moves are good. It's good to know how to move quickly in the pipeline. I think if there's a single strategy I'd love to know, like a fast move, it's how do I exit quickly and know when to exit? That's what I'm trying to figure out right now. Because
that's what I was just thinking.
Forever. If I had exited in December, a few days ahead of what ended up, going down all the way until mid-January, I would still be sitting on a lot more money and a much larger portfolio than I am right now for holding. So my getting money in, I think I'm fast enough. I'm trying to figure out how to get money out fast enough.
I'm pretty sure Brian's the best TA guy in the group right now. You want to talk about that, Brian?
That's no pressure.
Hey, but you are the author of the TA guides on the group, so.
I am. There's no real good indicator. I mean, recently, a whole lot of currencies have been holding relatively steady when Bitcoin's doing crazy shit. And that makes it really hard to find an actual price driver. A lot of stuff that's directly linked to Bitcoin volatility. It used to be whenever Bitcoin would swing, either up or down, didn't matter, alts would bleed like crazy because people would dump them, so they would have more either Tether or fiat to trade into Bitcoin. Or if there was a Bitcoin pair with whatever alt, they would just dump them. So the value was just shit in the bed because everybody was selling them to get into Bitcoin. But for at least the big three, Bitcoin, Ethereum, and Litecoin, they're all holding on pretty good now, regardless of what Bitcoin's doing. Unless Bitcoin's moving like 15+%, they're pretty good. It's really hard to tell on the altcoins, though. The best advice I can give is if you're holding a position on something and you're afraid of its volatility, then set a stop loss, something you're okay with. If you're up, there's no reason you should lose any money on that at all. Set a stop loss where you think you'd be okay taking profit, and you're good to go. If you're cool with losing 3%, that's cool too. Just make sure that based on whatever currency it is that you're looking at, its volatility, that you're not setting your stop loss too tight to where it'll get triggered just from regular market volatility. So you might end up taking like a 5% loss instead of a 2% loss, but you won't lose that money if there's just small variations in the market.
It's just the reason that I'm careful with stop losses in that regard is not only because we're all still pretty bullish on the market overall for the next year. None of us thinks it's over or anything like that, but it's these whipsaw moves, man, where it's like you set the stop loss somewhere reasonable and it whips through there for like 30 seconds and then jumps up and you're like, shit, you triggered my stop loss and you're up. And what did you do to me?
On Binance,
I'd set that kind of conservative stop loss.
Right. On Binance, they have stop limit. So it's a little bit different. You can say when the price hits this, put my order on the books to sell at this price. So it's not your traditional stop loss where you put in a sell order at a given threshold and it would just sell regardless. So there's a little bit of buffer you can do there. Chris, if you want to click over on that stop limit tab. Booyah. So this is a buy limit. You can do the same thing too. So the stop is where the buy or sell limit would be triggered. The limit is the price you want to pay, and then the amount's the amount you want to pay. So instead of just setting up a stop order as a limit order, limit sell order, you can do it this way, and it's a little bit safer. All right. That way you go through volatility before it gets set. And if you're worried about those whiplash movements, then this can take care of it. You can set your bottom dollar as the stop and then have your limit set slope up below that. There's really no safe way to avoid all that unless you're well outside of the average movement for whatever you're looking at.
So let's say, let's say you bought a token, or you bought 1,000 tokens at 750, right? And you had a stop set at 650. Oh God, if it goes below this, don't hang on to it. Just get rid of it. But then you can set that rebuy at like 550, and you just eked out some more tokens in that cycle.
Right. And you got to remember, selling a 2% loss and then buying at a significantly lower position will be easily made up, even if you get back to where you sold those tokens. As long as you're not trading with your whole stack, which is something you should never fucking do.
Yeah, I don't do that.
I want to talk about a slightly different strategy method that talks about coin picks, basically. There's a lot of volatility, among a lot of coins. And if we're just over in the standard BTC selection, there's a whole lot of crap to pick from when you're putting coins in. But one of the things that I've started doing is just doing my trades with the tokens that I'm willing to hold long anyways, because I believe in their project, And so if I can increase my volume of holdings with quick trades when there's swings, that's cool. But I just keep it among that set of tokens that I'm willing to go long on. That way, if we do hit this long, flat, lull period before the next upgrowth occurs, I'm not stressing it because I was going to hold them anyways,
Gotcha.
I'm kind of the same way. I was going to do another post on this, how the hell do you figure out what to trade? But then everything went crazy. I can, let me share.
Well, he's pulling that up. Chris, you've got some great news about Tron in April. I'm curious to know, okay, when something happens in April, what are you going to do? Are you, when it goes from 7 cents now up to what, $5, $10? What are you going to do?
Holy shit, $5. That would be awesome.
If it goes up to $5, I'm probably going to buy a very expensive bottle of champagne. And maybe throw a barbecue because that would be really amazing news. It's depending on how high the growth is. Literally, if it hit $5, I'd probably sell half the stack. The rest of it I'll hang on for the long term, and then if it experiences a dip again, I might get back in. At that lower price.
All right. So, am I sharing? Can you guys see?
Yeah, that's good.
Trading.
Yeah, I can see it.
Yep.
All right, cool. So there's thousands of coins, and it's impossible to sit here and, it's possible. It's just a horrendous waste of time to go through and look at all the charts, because you just end up looking at charts and then you get the deer in the headlights because you don't know which one's the best move or anything like that. So inside of, get out of the way, tools. All right. So inside of TradingView, probably some stuff you've never noticed. At the bottom, there's a screener, and you can put, let's see, all sorts of different filters in here. So if you determine that this is a strategy I've found that works well. But if you determine at a given MACD level or an RSI level that you'd be interested in looking at the chart, you can set all that up in the screener, and it will automatically, for whatever this is set up against Binance, for the exchange, it will go look at the stuff that matches your criteria. It's not foolproof, and you still have to look at charts, but if you're trading BTC pairs, you can filter, find those. And this is reverse sorted by percentage of change, because usually that's where you want to make the move. So you get this list of stuff you could act on. You still got to go do your manual analysis and see, why is this dropping? Is it within reasonable limits? Would it make a good trade? This one actually looks like it would be a little risky because it's still high. Let's look at longer charts. I'd still wait for it to move down a little bit, but this is showing 18 matches. Some of those are dead even and some of those are positive. But instead of looking through 3,000 charts, I've only got to look at 18 to get something I could likely move on in that time period. So that's a cool way to pick charts. If you can figure out what indicators work for your trades and how often and how fast you're ready to trade, set up a screener. Check it out. Watch it for a week or so and see if it seems like it would be a tool that would be useful for you.
Thanks, Brian.
Yeah, that's pretty damn in depth. Jason, any other final questions before we close it out for the week?
Hey, it's 5 o'clock. You guys have been more than generous, and thank you for letting me, ask my questions. It was a lot of fun. You guys are a wealth of knowledge, and I sure hope that other people pick this thing up and start watching, because from the very first show to now, this isn't blame flattery. You guys know what you're doing, and you'd be a fool not to kind of latch onto you.
Well, we at least know what we're doing. I'm not going to promise that we're like 100% right about everything or anything else, but our opinions are honest and generally well researched. Word. All right. Well, then we'll call it that's the end for this week. But see y'all next time, and we'll post this back to the group.
All right. Great.